Your decisions decide your habits. Daily habits decide your destiny. That is an anonymous quote. I've not been able to find who that is attributed to, but my friends, that is what you have got to do every day. Decide that your habit is to follow these stock charts, 10 to 15 minutes. I tell everyone this is not a get-rich-quick scheme. This is, however, a get-rich program. Why? Because think about it. If you learn to read these stock charts, to be able to determine accurately, is the market going up or down? Whether it's stocks, bonds, gold, ETFs, whatever it might be that you are interested in tracking, if you can determine the direction, what does that mean to you? That means that options are open to you. Real options, just buying and going in the right direction. I mean, it opens a whole world of riches and wealth to you that requires 10 to 15 minutes a day. That is your discipline. That is your habit. And that daily habit will decide your destiny. So please stick to it. Anyone can do this. This is not rocket science. This is charting art. And you have seen the magic of the weekly vertical crossovers and all that we have seen play out over the last several years. Those who've been with me for many years, I get your emails. I see your postings on YouTube and Facebook and everywhere else. And I appreciate the fact that you are mastering this, have mastered this. This is working for you. I want you to stick with it. Again, I do practice trades to this day. I still practice. Perfect practice makes perfect. I still do it. I also trade. I've been doing this for many, many years now. We're not a stock calling service. We're an education firm. We want you to train with us. And then and only then when you master being able to accurately paper trade, that is virtually trade, time after time after time, and you get good at it, don't stop practicing. Don't stop finding new ways to do things. And you experiment, you see what works, you make your notes, and then you try it virtually. And when it does work, then you can move into the realm of real trading, but only when you master the art of charting. And when people ask me about how do I learn how to trade options, I'm going to teach you how to trade options. But you've got to be able to read a chart first, my friends, or that option money is going to go away so much quicker than any money you misinvest in stocks or ETFs, because they still have value. Rarely do they go to zero. You know what happens to an option when you bet the wrong way on the option? And I hesitate to use the word bet. We don't want to bet. But when you go in and purchase an option, you can lose everything. You can lose the entire option contract price. Now, it's a lot less costly than stocks, but your money still goes away. I've got a great teaching I'm about to do on an introduction to options. It's going to give you complete, broad idea, understanding, knowledge of how it all works so you can start practicing that. That's coming. Let's jump into the markets for today. Isn't it amazing the difference a day makes? We had that little bump up in the market when the Trump administration said they weren't going to enforce some of the tariffs, and then what happens? The king has no clothes. All of a sudden, it's like, well, this was no agreement with China. This is just something put out so the markets could bump and they could clear the shorts, like I said yesterday. And guess what happened? Rotated right back over big time. S&P 500 down almost 3%. The NASDAQ 100 down almost 3%. Bonds up 2.25%. Gold up 0.68%. Amazing stuff when you look at where we were on our jumping in points. I want to give that information to you because, again, these weekly vertical crossovers are amazing in their accuracy, and we're going to go over those points as we move through. First thing we're going to jump into is the S&P 500. As always, our jumping in point Friday afternoon at 3:55 on the S&P 500. $292.28 on a down move. Where did things close? $292.28. We are almost $10 down, 283.90. So again, well, we're $9. We're $9 down, and a little more than that. 282.28. So yeah, we're down significantly, $9.70, something like that. So again, what are we talking about here, friends? We are talking about the power of the weekly vertical crossover, of using these charts to help you make intelligent decisions. And as we get out of the fall-winter trading, as we get into the fall-winter trading zone, out of the summertime trading zone, I've told you for weeks how awful the summertime trading zone is. As we transition out of it and into the fall-winter trading zone, things typically get better. They get better. So stay with it. Stay with the practice. Perfect practice makes perfect. We see the price percent oscillator just pounding down. Derivative oscillator gaining downward momentum. That solid green candle is turned into a solid red candle. Now pay close attention. We can see that the bottom still this week has not reached the bottom of last week. We want to see the wick on this week's candle go below the prior week, just so we feel better about continued down movement. We want stronger down movement, of course. We look at the 2-day chart now. Remember, this is only the first day of the latest 2-day candle. And what we see here on Wednesday is, of course, a down candle. The wick not as far down as the prior strong red candle ending Wednesday the 7th. And we went sideways for 4 days. And we see that we also have a wick on top. So we've got some surging back and forth. Derivative oscillator, however, is down, based upon further down from the prior one, and the price percent oscillator just clicked over going down. That's nice to see. Go to the 4-hour chart. What do we see there? We see two strong down candles after a sideways slide, a bump up on Tuesday, and we have a crossover on that 4-hour chart now going down. So those of you waiting to get in, of course, you have that crossover now that has taken place. Again, folks, with all the surging back and forth, watch these charts. Watch some kind of news out there that's going to try to stop this steep slide. Who knows where it might come from? The Fed might release something. Oh, we're going to reduce rates even further. The ECB, the Trump administration, Goldman Sachs. Who knows what might happen? But again, continue to watch those larger charts, pay close attention, and like we said, take profits when you want to. Very, very, very profitable trade so far in this move. And again, clearing out half of your trade, taking that profit, realizing that virtual profit, never a bad thing to do. Money, what do they say? A bird in the hand's worth two in the bush. Don't beat yourself up when you beat the market. And again, everybody can always go back in Monday morning quarterback and say, well, I could have made, instead of $10 a share on that trade, I could have made 20. You made $10, okay? Everybody else lost. So it's important to reward yourself when you do the right things for the right reason. Now, if you do something stupid for the wrong reason and you win, that's just being a dummy. You can't take credit for that. When the tide comes in, all the boats rise. Nobody's a master there. It's when you're following the rules, doing the right things for the right reason. And if you lose doing that, you don't beat yourself up either. That happens occasionally. Let it happen. See it for what it is. Note it in your trader's journal and keep moving ahead. We're going to go to the Qs now and keep pushing through these charts. This is the NASDAQ 100, down right at 3%, 2.99% for the day. And on the weekly chart, still a green spinning top, a really fat top, but has a wick on the top and the bottom. It is not red yet. It's not an open box green, which means strong up movement. The derivative oscillator's gone negative. We can see that we've not plumbed the depths of the prior drop, but again, down 3%. So price percent oscillator heading down, derivative oscillator gaining downward momentum in the red. First day of the latest 2-day chart, it has not plumbed the bottoms of the prior red down candles, but it is a nice red down candle, no wick on the top. Price percent oscillators about heading down. It's kinked over going down. Derivative oscillators about flat. We'll see how that 2-day candle wraps up on Thursday. And then we go to the 4-hour chart. We had that bump up on Tuesday and then down movement in the morning and the afternoon on Wednesday. Interesting, not a crossover yet. So those of you who've not jumped in, you can be looking for the cues to cross over going down on that 4-hour chart perhaps tomorrow, and you could perhaps find a jumping in point there. Hopefully, when that crossover occurs, the derivative oscillator will also flip over negative. So we'll wait and see what there is to see there. Now, oh, by the way, our jumping in point on the Qs, also Friday afternoon at 3:55, 186.90. The Qs ended up the day 182.76. So again, that's some nice movement. Qs is what, maybe a third less than the NASDAQ. It's right at 200, and the NASDAQ and the S&P is right at 300. So again, that is substantial dollar movement and a great trade so far. If you were in that, again, make up your own mind as to when you wish to take profits, or if you want to take some profits and let the rest of it ride. Again, you need to practice those things. If you don't practice them, when you get to the real world, you're going to make bad calls. That's why we ask you to use your daily market worksheet, weekly market worksheet, and particularly your trade worksheet when you're in trades. That's how you master this stuff, and you have notes and a Bible, an almanac you create for yourself to be able to go back and look and remember those important lessons you learned. Going on to 20-year bonds, up 2.25%. Isn't it nice to see bonds and gold moving the opposite direction of stocks as they're supposed to? Well, we see bonds resume their up movement, zooming up. We see the price percent oscillator spiking up, derivative oscillator spiking up also. We go to the 2-day chart. What do we see there? Again, just a power up candle moving right along that trend line. Derivative just stair steps moving up. Price percent oscillator moving up. Go to the 4-hour chart. What do we have there for you? Up movement in the morning, and then sort of the same in the afternoon around the same spot. Price percent oscillator heading up. Derivative oscillator turned green at the end of the day. So again, nice up movement continued in bonds. Big up day for bonds, reacting as we would expect to the stock market, plunging. So again, that move, our jumping in point on bonds, was Friday the 2nd of August at 136.29. The 2nd of August, 136.29. Check this out, 145.69. My gosh, almost $10 on a $136 ETF. Phenomenal. 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 So again, as Jim Cramer says, there's always a bull market somewhere. Well, it's in bonds right now. And again, don't hesitate to take some profits. Continue to watch. We'll see just how far this cranks. But again, you can expect the government and the big banks and the Fed to try to do something to stop this hemorrhaging. What's going on with gold going up 0.68% for the day? Our lowest, our slowest gainer, in fact, bonds and stocks way down about 3%. Gold up 2.25%. So the one with the least amount of movement, negative or positive, is gold. But we see the price percent oscillator heading up. Derivative oscillator still losing some momentum. Gold is hitting a higher high, both in the candle itself and the wick, which is what we want to see. Price movements above the 2-day, well above the weekly. We go to the 2-day chart, first day of the latest 2-day candle. What do we see there? Is hitting a higher high, both in the candle body and the wick, just a little higher than that prior one. Price percent oscillator heading up, derivative oscillator gaining upward momentum. And we go to the 4-hour chart. What does it show us? It shows us after that slide down over Tuesday, up in the morning and the afternoon. But curiously, we look at the price percent oscillator, and it's oscillated back through the red signal line, and the derivative oscillator is gaining downward momentum. So keep your eye on gold. If you've been in that gold trade, our jumping in point was on Monday, the 5th of April at 137.82. 137.82 up to 142.75. I just love it. Just love it. Great, incredible gains. So again, you can take some profits. You don't have to just keep riding, but continue to watch. Let's see what there is to see, learn what there is to learn. And again, I'm just loving it. Okay, my friends, that's where we are. Hey, Patreon members had a great Q&A today. If you're not a Patreon member and want to be one and want to know what it is we talked about on the live question and answer, go become a Patreon member. We'll send you the tape from today's live Q&A. We'll also send you the latest Patreon sort of pre-Q&A. I did a special video for them over the weekend. I'll send that to you too, plus all the special Patreon training that we have for those guys. That includes short chart training, Bitcoin training, long chart training, plus the Bitcoin chart. And so we've got all sorts of great stuff for our Patreon members. Follow the link in the show notes to become a Patreon supporter. Those are the guys that we really, really appreciate for their help with all of the costs in running this channel. And if you haven't purchased our book, Charting Your Way to Wealth, man, you got to have it. We're waiting Thursday. Tomorrow we will have our 12th printing in. So get in line. I'll be sending all those books out autographed to everyone tomorrow. So get in on the 12th printing of Charting Your Way to Wealth. Thank you, my friends. It is exciting to see the market moving in discernible directions. And I know you're excited because I see what you're posting on YouTube and Facebook and everything else. So keep the faith. Follow the charts. Remember, follow the rules. They're there because they work. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.